everyone, and welcome back to the Relai Bitcoin podcast. Today we have a legend in the space. Thank you so much for taking the time. Parker Lewis, how are you today?
Julian, I'm doing well. Good to see you and appreciate you inviting me on to talk about all things Bitcoin.
Amazing. Yeah, there's a lot to talk about currently. But first of all, where do you sit? You're kind of in a Bitcoin-focused co-working space in Austin. Is that correct? Can you
Yeah,
tell us a little bit more about this? Because here in Europe, I don't think a lot of people know of this.
yeah. So this is Bitcoin Park Austin. It formerly was operated under the name Bitcoin Commons, which was a space that I helped create when I was at Unchained, and where we host bit devs and a number of other Bitcoin meetups during the month. We have an Austin Bitcoin Design Club, an AI meetup, Austin Bitcoin Club. We're hosting Adam Back and Turda tomorrow night, and so it functions as a Bitcoin co-working space as well as an event space here in Austin, Texas. So I co-work out of here in the day, and we have a few conference rooms. So this one's themed with Bitcoin books. You see Vijay Boyapati's the bullish case for Bitcoin behind me, and then Jan Pritzker's Inventing Bitcoin, and we've got the Bitcoin Standard and the Fiat Standard and Bitcoin and the American Dream. So just working out of a conference room here to record podcasts.
Nice. Yeah, we have some small things like that popping up in Switzerland. For example, in Zurich, there's the House of Satoshi, but it's really small. I mean, there's some, maybe 2-3 desks. People can come and work there. It's not a real co-working, but it's kind of there are events, and it's a kind of a community hub. It's becoming one at least. They also sell books and hardware wallets, and you can withdraw Bitcoin. You can buy Bitcoin with cash at an ATM, and there's always someone there who kind of can give you consulting or answer questions if you have about Bitcoin. So that's kind of cool, but it's very small. And then there's a co-working space coming up in Lugano, where the whole Plan B forum and Plan B thing is. But it's really small. I imagine in Austin, like this one is really big, right? There are like several companies there.
Yeah,
Adam Back is coming there.
Marty Bent's podcast studio is also here. So yeah, it's like tomorrow night we'll probably have 150-ish Bitcoiners here, or people interested in Bitcoin. So it's a good sized space where we can host some great events. But then also there's a big benefit to working out of here of just a range of different people working on, anything from Bitcoin wallets to Bitcoin mining. We're working on Bitcoin payments. And so kind of it's a good melting pot of if you have ideas and you want to run them by, in certain cases we have customers that work in the Bitcoin mining space. So I get to, walk over and talk to them about, what their needs are. And so I definitely think the in-person space is a benefit to the Bitcoin community here in Austin, and there's more popping up in the United States. Like there's Bitcoin Park Nashville. Basically now it was the first Bitcoin Park location. Now they've taken over operations. Rod Rudy and Matt Odell, the co-founders of Bitcoin Park, to have this be their second location. But there's the space in Denver, and then Presidio Bitcoin in San Francisco, Bitcoin Bay Foundation in Florida. So they're popping up more and more here in the States. And for me personally, it's been a huge benefit to just being around the Bitcoin community, having, not just a place to work, but leveraging folks in the community as we're, forwarding ideas, but then also what I'm currently working on in terms of Zaprite and Bitcoin payments.
Yeah, really people with different experiences, different skill sets, but with the aligned vision, right?
Yeah.
With the same thinking about Bitcoin and all kind of stuff, which is still important and hard to find in others, because still 90% of people are not into Bitcoin somehow. And you're working on this a lot with your company, with your book, which I'm really passionate to talk about.
Yeah. And honestly, I'd say it's more like 99% of people don't yet understand. So by being able to have a flag up in a location that, where we host events, it's something that, allows people to be drawn in and to expand the local community and expand our network. So I definitely recommend it. A lot goes into it, but it delivers a lot of value to the local community, and then also people traveling through. So if the idea ever comes to a town near you, definitely jump on and help contribute.
Definitely, definitely. I'm trying to do whatever I can with the House of Satoshi to make it a bit bigger. But yeah, I love what you're working on, or how you are working on bringing Bitcoin to people. Of course, that's also our focus at Relay here in Europe, and you are basically doing it all over the world with your educational focus. You're doing a lot of speeches. You're participating in conferences and meetups, etc. But mainly also currently, I mean, you wrote your book. That's probably one big part that helps people really understand from the ground up and get familiar with Bitcoin. And then the other is your company Zaprite, right? So let's start with your book. Came out like 2 years ago, right?
Yeah, or my time gets lost these days, but I think like a year and a half ago, the end of 2023. I'm like, okay, what year are we in? 2025. So yeah, so about a year and a half. And yeah, it's really focused on a bottom-up view of Bitcoin as money. And so it lays out kind of what I would describe as, because most people have never had to consciously consider money. So what makes money money, how Bitcoin imbues those properties. It has a section on the common misconceptions, because as someone's on their journey to Bitcoin, there are always these logical questions, and they're really common questions, but still generally each person has to work through why Bitcoin's not too volatile, or I thought this was just for criminals, or can't it just be copied? There's a number of those very logical hangups that people have as Bitcoin's starting to at least become possible in their mind as a monetary medium. And then an anchor point to the problem, because a lot of people look at Bitcoin as a solution in search of a problem. They don't understand the problem that Bitcoin is intending to solve. They don't understand the problem of printing money. They might know that the government or the central bank prints money, and they might have an intuition that there's something broken about that, but they don't know necessarily why it happens or how it happens or the ultimate consequences. So I kind of approach Bitcoin from three different perspectives: the bottom up, the working through common misconceptions or questions, and then understanding the problem that Bitcoin's intending to solve, the money printing problem, and really helping that become more intuitive to people of how that it doesn't just go on forever, that it ultimately breaks permanently. And that is why Bitcoin is so important, that when money fails, that's how wealth is destroyed. And thankfully we have Bitcoin, not just to fall back on, but that will become the primary monetary good form of money that's facilitating trade day to day for the world.
Yeah, and I think more and more people kind of start to wake up to the fact that their money just loses value, or probably that's not even really what most people understand, but what they understand is that prices goes up. Prices go up and up and up, and their salary don't go up equally fast. And so here in Switzerland even, I mean, you need to be a top 10% earner of the country, which was one of the richest countries in the world, in order to buy a house. Like most people can just not for themselves, they cannot earn the money to buy a house. They need to inherit or whatever, get money somewhere. But most people actually don't even, they can't buy a house, right? So everything gets so much more expensive, also food and everything. And so I think really people, I don't know how it's in the States, maybe even worse in the States.
I think it's worse in the States. And that's one of the things, as an example, where I specifically talk through explain what happened in the Great Financial Crisis in the United States, how there was a housing crisis, and then the Federal Reserve in the United States, the central bank of the United States, printed a bunch of money to specifically force home prices higher. And if you thought about yourself as somebody young entering the economy or on the lower end of the economic spectrum, either or, just as housing prices were coming down, so they may become more affordable to you, the Fed worked in opposition to that. And central banks do that all over the world. I believe the U.S. is likely the worst of everyone in terms of essentially leveraging mortgages or the debt stacked against real estate to manipulate the price of money and to manipulate the price of houses. But if you just know that the prices are going up, people generally have a sense that their money is becoming worth less, but they don't actually understand the root cause. Why is that happening? Why are they doing it? Because it's not necessarily, I don't want to say, that's probably loaded. I don't believe that it's a group of people that are just evil and intending to do harm to people. They have a rationale for why they think it's helping, but it doesn't actually help. And that it doesn't matter if someone has good intentions. What matters most is what is the actual result. And the result is that it makes, for the reason that you just described, that people's wages do not actually keep up with it. It makes everything in real terms cost more. It actually creates this, at the most foundational level, a distortion of economic activity that makes trade and specialization more difficult, which, ultimately kind of in the most immediate term mass over an economic imbalance, allows it to become sustained, and that as they print more money, that those problems just persist and become larger, and eventually the money fails. And that's really why we need Bitcoin. But trying to help people understand that from a first principles level of, I do think that the people intuitively know that money doesn't grow on trees, and that if you print it, it will stop working. At the same time, at a societal level, people have become so conditioned to it, and and at least in the developed world, the currencies haven't failed. So there is somewhat of a boiling frog scenario where people look at it and say, well, they've been doing it for a while. Why can't they continue to do it? And they need to connect back to that idea that the common sense says it can't go on forever. And the more that you can help somebody understand the problem, the easier then it is to see Bitcoin. And that was really how I came to understand Bitcoin. I first learned or figured out that the central bank of the United States was always going to have to print more money. I knew intuitively that was a problem. And then really serendipitously, I started going down the Bitcoin rabbit hole and figured out that the fundamental value was in Bitcoin's fixed supply, that it was money that couldn't be printed, and put those two things together to say, okay, well, I know independent of Bitcoin that they're always going to have to print money. I know that's a problem. Oh, okay. Here, this thing is as being put forward specifically as a solution to this other thing that I figured out is a problem. So
the big problem, I think, why people don't get that is, I mean, they just think it can go on forever because they don't really feel it in the day to day. It doesn't happen fast enough, right? But if it just, it's just a 1%, 2% a year, as probably, for example, in Switzerland now, or in the EU, it's more like 2 to 4%, at least officially. Unofficially, it's probably a bit more, but it's still like it gets faster. Like people really now see the price of their eggs and their bread and their milk going up, but still it's not fast enough so that it's not like hyperinflation yet, where they really think like, oh my God, something's really wrong. But as you said, they need to keep printing and actually keep printing more. To kind of sustain this debt game that they're playing. And so as they have to print more and more, do you think that there will be an accelerated inflation, and that actually it comes to a point where the people do feel it, like even on a monthly basis or weekly basis, so that they then really start looking for a solution like Bitcoin?
Yeah, I think that I do think that inflation will accelerate. At least here it already is. Like one way that I would describe it is, say 15, 20 years ago, people knew that the dollar lost value, but it was so gradual that they couldn't actually recall. And I say this as a generalization, that there wasn't a focus on a specific good. Now, the price of eggs increase multiple times a year. The price of beef increases such that people remember, and I'll speak in dollar terms. I know probably a lot of your audience is European, but at the beginning of this year, the price of beef at my local grocery store was $19.99. Now it's $22.99. 5 months later. That when it starts to happen in a short enough time frame where they remember or recall and they're starting to pay attention, that's a sign that it's accelerating in frequency. Because when people look and they see, whatever the central bank reports or the central government reports as inflation, they generally know that that's not what they're experiencing in their own life. Mm-hmm. And when they pay attention to the goods that they actually consume, they start to realize, in my case, hey, the beef at the local grocery store has gone up 15%, but it doesn't go up 15% at once. It goes up in 3 or 4% increments. And when you add them up, then you're like, oh shit, what's happened here? And so I think it's already gotten to the point where the frequency of price increases have gotten to the point where particularly on food, people are paying attention. But like what you mentioned too, most people can't afford houses, and that's what happens when you print money. And also you mentioned something that I'll reinforce now, which is my explanation to people of why they will always have to print money is because it's designed to stave off a credit collapse or a collapse in the debt system that, today in the United States, just using as an example because I have it off the top of my head, there's about 102 trillion in the U.S. system wide in terms of total debt, but there's only about 7 trillion actual dollars floating around. And so as the market figures out how short dollars they are, the credit system, the amount of debt starts to feed on itself to functionally cause a collapse. The central bank steps in to print money to prevent that credit system from collapsing, and on we go. That the way that is intended to work, because the system is so leveraged, is to actually not just stave off the credit system from collapsing, but to induce more credit. And so they're in this never-ending game of printing money to prevent a credit collapse, but they actually need the credit system to expand, otherwise it will collapse. And then as more debt accumulates, then they have to ultimately print more money. And through that process, the people that are harmed the most are either the people that are entering the economic system, like the people who are entering the economy, or the people on the lowest end of the spectrum. But I also like to reinforce it's really not about rich versus poor, because what it's doing is harming everyone in the end. It just has worse consequences for certain people who have less savings and don't have assets to effectually capture the new money that's being printed, and all they have is their time and labor. But everyone ends up worse off when the currency functionally stops working, which is what happens during hyperinflation. It's not just that the amount of money is being printed at a faster rate, it's that the money is being printed at the same time that the actual delivery of goods and services becomes harder and harder, because it realistically exists that way for a number of reasons. But the printing of money at a very root level distorts price signals, and the price signals are really what enable trade at scale as the second derivative of just money itself.
And what have you learned when you wrote this book? Because your mission with it basically was to make people understand, to help people get educated and understand why we need Bitcoin and what is wrong with the fiat system. And I think this is a great approach. Like first the problem, then the solution, right? You talk about the problem, that they keep printing money, your money loses value, and with basically tax that you pay and fees that you pay and interest rate that you pay, and mostly that the inflation that is an invisible tax, you just get poorer and poorer and you can afford less. So there we go to the solution, where this is money that is independent from governments and banks, and central banks cannot be printed. You can hold it yourself, it's censorship resistant, etc. So it keeps its value, or it's going up in value. What have you learned kind of how to make this point to people? Because you I don't know, how long did you write this book? Probably months or even years. So you must have learned a lot on how do I bring this point across for normal people that are now reading your book in hundreds of thousands or even millions, right?
Yeah, I think that one, I would say, I try to simplify it as much as I can. To introduce an idea that then, allowing for the rabbit hole to sit at a lower level. And I go into the rabbit hole, but like to focus somebody on a very logical order of what's most important first, and then elaborating from there. And that when inevitably this comes through the book, but when I first started explaining Bitcoin to people, I started with the history of money and the what would I say, like explaining barter and coincidence of wants. And I just oftentimes find people would gloss over. And so then, and consistently, for different reasons or explaining different aspects of Bitcoin in the book, it really is just that simple idea of starting with a problem and then connecting how Bitcoin's a solution to it. And then, and again, in many ways, this book is made for people whose minds might think like myself. Like, I don't think everyone's minds think the same way, but I was somebody that had to very hierarchically and logically order Bitcoin as a solution to the problem of printing money. And so at the highest level, I started, okay, the problem is printing money. There has to be some solution. Is it Bitcoin or is it gold? But if I first start with the idea that, yes, there is a problem, because some people don't agree that the printing of money is a problem. Now, I would say 99 out of 100 who have common sense and aren't an academic economist or a central banker will agree with the statement, but not everyone will. But you still have to start there. And then from there, it's, the fixed supply of 21 million. But then it's, well, if you start to understand why Bitcoin exists and why it's important, you can't just take someone else's word for it. You do have to then, at a lower level from there, form an understanding for yourself as to how it's possible. Otherwise, you're not able to think for first principles. You're only relying on something that somebody else said. And so I do get into those details, but I anchor it to why is it relevant? Because it becomes very difficult, almost like the more closely you stare at Bitcoin, the harder it is to see. But if you're able to understand the 5,000 foot view, the really why behind Bitcoin, then you can zoom in to a very close level, and you need to do that to be able to stand on your own 2 feet. And if something happens in the world, then to look at it and say, okay, based on everything I know about Bitcoin, does this change anything about its ability to enforce its fixed supply? And so, I just try to always start from that point of like, start with a problem and then provide a logically ordered argument for, why something exists or why something is defendable and credible within the Bitcoin system.
Yeah, that makes a lot of sense. And so basically, Bitcoin has this best savings technology that we've ever had because it's fixed supply and it's kind of the counter thesis to the fiat money is ever inflating. It makes it a great store of value because it keeps purchasing power. It goes up even as the fiat money expands. So that's kind of one of the main points that you're making. And then for me, that looks, and for most people, that looks like, oh, okay, this is great store of value, something like gold, something like digital gold. So I want to stack it and I want to keep it for as long as I can, right? I don't necessarily want to spend it. I want to spend the fiat that is anyway inflating, and I want to keep the disinflationary great savings technology. Now, but I know you're working at a company that's working on Bitcoin payments, and you're an advocate for, we need to use Bitcoin more as a payment. What are your thoughts on a Bitcoin as a savings technology or store of value versus medium of exchange and payment technology?
Well, I think first, the way that you laid it out is the logical view, right? The person, as they start to save in Bitcoin, they say, well, I want to save my finitely scarce asset, and I'd like to spend my depreciating asset, the fiat. And that's a very logical position to have, but for the same reason that you would think that way, then eventually everyone's going to think that way. And that everyone's going to want the finitely scarce asset. And so the way that I think about what we're working on at Zaprite in terms of Bitcoin payments, it's not really helping people spend their Bitcoin. We're helping the people that have already understood why Bitcoin is the best form of money, to enable those people to get paid in Bitcoin directly from their customers who are willing, because otherwise they just have to receive fiat, incur the fees of the fiat system to receive the revenue from their customers and then do the fiat to Bitcoin conversion. And those people are already doing that as well. Like they're doing both. They're converting a portion of their savings in fiat from a personal standpoint into Bitcoin, and then they're converting a portion of their revenue that they're receiving for their business into Bitcoin. It's all the other side of the same coin. That I think that anybody needs to credibly understand why Bitcoin will store value first in the logical order. But once they do, then they logically get to the point of saying, well, why don't I just take it directly from my customers if I have people that are willing to pay? And, there's this connection of Bitcoin can be thought of like digital gold, but it's also far more than that. The way that I think about it is that it basically possesses all of the strengths of physical gold without the weaknesses, and then all of the strengths of the digital dollar without the weaknesses. It has the scarcity of gold without the weakness that there was this inherently centralizing force both to store it as well as to transfer it, which is why dollars and fiat currencies emerged. And then on the dollar side, the dollar's easy to move digitally, but it is functionally costless, or it is very easy to produce at very little cost. That's why central banks can produce trillions of it. And so I think that on anybody's journey to Bitcoin, it's to say like, one idea I'd connect for us is, imagine we're all saving in Bitcoin. Well, we're not here just to look at a number on our computer screen and for that to have some dopamine hit that we have savings, right? It's like if that were all it was, then Bitcoin's not really a value. Money is a value as a general medium because it helps to coordinate trade. And that enables specialization, division of labor. That ultimately, what Bitcoin derives its value from is helping to facilitate value transfer. And the most common form of value transfer today is very logically money for money. I trade my Bitcoin for a fiat currency, but a fiat currency is only just one good in the market, and that it would be very logical that as Bitcoin grows, as people's knowledge of Bitcoin grows, that more people say, oh yeah, and I'll sell my good and service for Bitcoin as well, because I figured out for the same reason that Bitcoin will store value better than fiat, so I can just cut the fiat currency out. And then the more people that do that, the more trade will occur directly in Bitcoin, and the more efficient the Bitcoin system will become. So I don't think that the ideas are actually in opposition to each other. I think they're just logically ordered.
Yeah, so then people sometimes, these newcomers that we have talked about before that will also enjoy your book, or that kind of the target audience for your book, they often have this misconception that, yeah, I see Bitcoin in the last 10 years, it rose in value from like $500 to 100,000, and okay, I understand that it's scarce and it's going to go up, but then I cannot do anything with it, right? It's not accepted anywhere as a form of payments, and in their world, not anyway. There are a lot of ways you can use Bitcoin already, but you kind of need to look for it, right? Amazon, for example, doesn't accept it, and so for them it's like unusable, so they think that then long term this will not have a value, but it is just speculation. But then I often say, look, gold is kind of the same, right? It's used as a store of value for thousands of years, and you can't really buy anything on Amazon with it as well. And then it makes them think. So I usually make more the argument of, okay, Bitcoin can only be a store of value, and it's actually enough. You would make the argument that no, it's like logically going to become more useful as a means of payment. Like what needs to happen? Why do you think it's different than gold in that aspect, so that it will develop into a medium of exchange as well? And what needs to happen so we can get there?
I'd say that the biggest difference is that Bitcoin's capable of doing what gold could not do, right? That it was not functionally possible to affect trade at the scale that the global economy was demanding. And so the solution for that was put gold in vaults, take fiat notes, paper notes initially as a contractual obligation of the bank, in the future the central bank, and then it was easier to transact with those dollars. So the fact that Bitcoin has this property of finite scarcity, as well as the ability to send it to anybody in the world over a communication channel, that it's the combination of those two things that, in my view, make fiat currencies obsolete where they were not obsolete in the context of gold, that they actually help solve a scalability via portability problem. And so I also think about it as, it's like Bitcoin. I'm not somebody that says Bitcoin, I don't know. It's not one of those things where it's like, in order to survive, Bitcoin needs to be a medium of exchange. It's more so that because of what Bitcoin is and because it's capable of it, it's logical that people that begin to understand it will demand it. And that the tools need to first exist for a business owner to say, yes, I need that service, because otherwise I'm going to pay a 3% credit card transaction, and then I might have chargebacks in my fiat world that has more costs. Maybe that's 4 or 5% when I add it all up. And then there's this time delay and Bitcoin's going up. And so there's just this natural, logical, it's a force like gravity that, hey, here's this finite scarce form of money. Everyone's going to demand it. Well, what's the most efficient way to get it? Not necessarily today, but in the long term, it's going to be somebody paying you for that. And not having to insert a fiat currency. But in my view, it's like both of those things are important, right? Like, but what I worked on before, it's like I view custody as the most important piece, because it's like, well, if it was possible to lose Bitcoin, then what good is its fixed supply? Bitcoin might have stored value, but if you lose it, it's really why, and I respect what you guys do. It's, I will respect anybody working on Bitcoin, but self-custody is really important to that and enabling it. And so, at Unchained, we enabled collaborative custody multi-sig, and then help people, convert their fiat to Bitcoin. It's like that, so long as only 1% of the population understands Bitcoin, it's like it's very logical that the way that people first acquire Bitcoin is through some fiat exchange. At the end of the day, though, you add enough people that are understanding Bitcoin, and enough people have Bitcoin, then the most efficient way to get it just becomes allowing your customers to pay you, and you de-risk a central choke point being your fiat bank in terms of how you actually receive revenue from your customers. And so I don't really think it's not really one or the other. It's just, hey, Bitcoin is capable of facilitating direct exchange where gold wasn't. It doesn't necessarily need to be more in order to quote succeed or be successful, but it will, because it's capable, and that people will logically demand it.
That makes sense. And with people here also, like your target audience with Zaprite is business owners that want to accept Bitcoin easily, and don't want to get through the hurdles with all the fiat integration, right? What kind of customers do you guys have? Can you speak about like what kind of categories of businesses are most interested in accepting Bitcoin?
Yeah, we really focus on Bitcoiners first and foremost. Which generally means we focus on small to medium-sized businesses, as in our expectation, the most, again, logically ordered person to accept Bitcoin as payment. If you first have to understand why Bitcoin stores value in order to want to sell your goods and services for it directly, then the more people you put into the equation of a decision, thinking about, as soon as you start to introduce a board, you need a consensus of 5 to 10 people. And a single owner business can make that decision as soon as they understand Bitcoin. So I'd say there's two cohorts that we focus on. We focus on Bitcoin-centric businesses, businesses in the mining space, people selling goods or services like custody or wallets, people that host Bitcoin events. Those are the most logical places where you have overlap between somebody that a business owner that wants to accept payment, as well as a customer base that has Bitcoin and a willingness to pay in Bitcoin. But then from there, I would say it's Bitcoiners that own businesses, and generally small to medium-sized businesses. So it might be a photographer that has a photography business. It might be an attorney that has clients that would be willing to pay in Bitcoin. It might be dentists, doctors, basically describing people that would have small to medium-sized businesses with relatively few decision makers where they have a lot of control. We have people that build websites for people, so I would say that where we focus is, okay, where can we meet our customers where they are? Because we can't be something for everybody. We have an API so that if someone has a custom application, they can integrate Zaprite directly into their business. But then we focus on basic commerce templates. Like for anybody that invoices for their service, we have an invoice where they can basically be paid in Bitcoin and fiat. And so, but not everybody, accepts money via invoices, but people that have small to medium-sized businesses oftentimes do. And that if you think about the universe of people that understand Bitcoin, they're generally not densely populated in any one part of the economic system, which is interesting, which makes the problem of Bitcoin payments difficult. But we kind of, draw a few Venn diagrams for, okay, who are the most logical people to adopt Bitcoin payments first? That translates to who has customers that likely have Bitcoin, and then what are the types of commerce that we can enable being a small startup. And so our API, our invoices, we're about to launch a ticket solution. People are already using our payment links for tickets to things like events. And then we just think strategically in terms of how we'll be able to build a network effect around a group of people that are demanding Bitcoin payments. And, the Bitcoin-centric businesses that have Bitcoiners as customers, as well as people who are hosting Bitcoin events, have people that are coming to in-person events. That's our way to then find the next wave of people that are logical to demand Bitcoin payments.
And then it's an adoption spiral, right?
Yeah.
And this accepting Bitcoin as a payment and paying in Bitcoin is a very important vertical of the total adoption. I agree.
Yeah, absolutely.
Very nice.
Like there was
Thank
an example.
You so much.
Oh yeah.
Sorry, I'm so sorry. I think we had a very little delay. Please go.
Oh, I was just going to use an example where it's because first you have to understand why Bitcoin stores value. But once you see somebody accepting as payment, like in my view, 90% of the population Bitcoin's going to become far more intuitive once something they need or want accepts Bitcoin. That its idea and part of the education will be seeing it used. And once people have to search for it less and it's just out there more, that will actually help accelerate the connecting the idea of Bitcoin as money. So I think it's just it's a one by one, one mind at a time, both on helping people, buy a little bit of Bitcoin as well as one at a time turning up a new small business. And the more of those that we stack together, the stronger Bitcoin becomes.
Yeah, absolutely. And then wherever people will see the Bitcoin logo in shop fronts. Now I think Shake, and I didn't know this company before.
Yeah, Steak and Shake. We didn't have anything to do with enabling them, but that just creates a huge tailwind. It's I think they've got 160 or somewhere like 150 to 300 locations, and now they're accepting Lightning payments. And everyone that goes through their checkout is going to see that Bitcoin is a payment option. Even if it's a small subset that's paying in Bitcoin, there's a market signal being sent. And the more of those that get stacked up, anybody working on Bitcoin is benefiting, because it just makes Bitcoin as money more intuitive.
Absolutely, and I agree with you. Like people seeing it actually working, they will then also start splitting bills. Oh, I can just send you some sats for the lunch, etc. And then just more and more it becomes something that we use every day, and it becomes money. And people will see the benefits of it, and it will spirally adopt. That's very interesting.
Yeah.
So it's cool that you're working on this. Thank you so much for everything you do in the Bitcoin space. Thank you for being here. And I do have a last question that I ask to every guest. So you laid out how good you think Bitcoin is as a store of value as well. So how much of your net worth in terms of percentage do you hold in Bitcoin?
Functionally 100% in terms of liquid savings, I'd say. So I don't own any. The only stocks that I own are equity in either companies that I've worked for or companies I'm currently working on. I don't passively hold any stocks or bonds. And I hold very few dollars. So I hold enough dollars to kind of have a small working capital account. But practically speaking, 100%. And then, I've got, real estate and things that I need to consume, but I don't own real estate passively. So anything that is savings is virtually 100% Bitcoin. And then, things like, a house that I, live in, or a car, is my, other side of my assets, but 100% for functionally for this purpose.
And it's a stupid question, but you also accept Bitcoin as like form of payment for whenever you give a presentation or
I don't require people pay me in Bitcoin, but always accept it for my books, and then we accept it at Zaprite, and then if I'm doing a speaking event, accept it as there. So
amazing. Really working on the circular economy.
Yeah.
Which is amazing.
And I think anyone will get there. Once it really clicks for them and they've experienced it for long enough, then they'll say, if I've got customers, I should make it available to them, because it would be better for me if they would be willing to pay me, and then you create incentives.
Yeah. Yeah, 100%. People will even give a discount if they get paid in Bitcoin. Like I would say, like, if you pay me in Bitcoin, I give you 10% discount.
I typically charge a fiat premium. That's one of the things at Zaprite. You can either put a discount on Bitcoin or a premium on fiat. And so I'll typically charge a 10% premium if someone wants to buy my book in fiat. And people oftentimes do. And then I'm like, okay, that's cool. It offsets my fiat costs, and the incentives are aligned. But oftentimes people who use our invoices do discounts rather than premium. So, but it does work. It allows you to communicate your preference without having to have a sticker that says one is accepted here or preferred here. You just put the economic decision in the customer's hands, and more people will pay as you properly express the cost and preference.
Absolutely. Makes total sense. Thank you, Parker. This was a great conversation. I've learned a lot, and hopefully see you in Vegas very soon.
Yeah, Julian, appreciate you having me on.
Hey, this is Joel again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.